Is the artificial intelligence boom sustainable, or are we seeing the first signs of a bubble? This week, Nvidia, the company at the center of the AI revolution, made headlines with a dizzying series of multi-billion-dollar deals. The company restructured its massive partnership with OpenAI and deepened its alliance with Meta, which is planning to spend over $100 billion on AI infrastructure this year alone. Yet, despite these blockbuster announcements, Nvidia's stock has been largely treading water, leaving investors to wonder, with quarterly earnings just around the corner, is this a momentary pause before the next surge, or a signal of growing caution? Welcome to TickerWatch News for Nvidia, Week 8, 2026. This is your weekly briefing on the latest news and developments for the company. We'll break down the major headlines, from massive new partnerships to the investor sentiment ahead of a pivotal earnings report. Stock snapshot. Over the past week, Nvidia's stock continued the consolidation pattern it has been in for most of 2026. After a powerful run-up, shares have been largely becalmed, trading mostly sideways. The stock is up just under 2% over the past month, slightly underperforming the broader S&P 500 index's recent gains but holding steady. This pause comes even as the company's partners announce enormous capital spending plans for the year. It appears investors are in a holding pattern, waiting for the company's own results to confirm the AI growth story before making their next move. The key takeaway is that after a period of intense upward momentum, the market seems to be catching its breath, letting the fundamentals catch up to the stock's valuation ahead of a critical earnings report. Top news and headlines. It was a busy week for Nvidia, dominated by headlines about its evolving relationships with some of the biggest names in AI. First, the company appears to be finalizing a restructured investment in OpenAI. Reports indicate Nvidia is close to making a $30 billion direct equity investment in the ChatGPT maker. This deal replaces a more complex, unfinished $100 billion long-term commitment announced last year. The new arrangement is seen as a cleaner, more straightforward investment that solidifies Nvidia's position as a key hardware supplier for one of its largest customers. A significant portion of the new capital raised by OpenAI is expected to be used to purchase Nvidia's AI chips. This news sent Nvidia's shares higher. Next, Nvidia announced a major expansion of its multi-year partnership with Meta Platforms. Meta plans to deploy millions of Nvidia chips, including current Blackwell GPUs and future Rubin and Vera processors, across its global data centers. This move is part of Meta's plan to spend between $115 and $135 billion in capital expenditures in 2026 alone, with a huge portion dedicated to AI. This partnership is significant for a few reasons. It secures a massive long-term revenue stream for Nvidia. It also highlights Nvidia's strategic push into the data center CPU market. For the first time, Meta will deploy Nvidia's Grace CPU-only servers at a large scale, putting Nvidia in more direct competition with traditional processor makers like Intel and AMD. These developments come just days before Nvidia is scheduled to release its fourth quarter results on Wednesday, February 25th. Expectations are incredibly high. Analysts project revenue around $65.5 billion, a jump of nearly 67% from the same period last year. This report will be the last of the Magnificent Seven tech stocks to report and is seen as a crucial bellwether for the entire AI industry. Finally, the company is also making a strategic push into India's growing AI ecosystem. Nvidia is partnering with local venture firms to support early-stage startups and is working with Yotta Data Services to build one of Asia's largest AI superclusters, which will feature more than 20,000 of its GPUs. This move aims to cultivate future customers and expand Nvidia's revenue base beyond its core U.S. hyperscaler clients. Market reaction and investor sentiment. Investor sentiment around Nvidia is a mix of high expectations and growing caution. On one hand, analysts remain overwhelmingly bullish. Wedbush analyst Dan Ives recently called the company the godfather of AI, and UBS raised its price target to $245. Consensus price targets suggest a potential upside of over 30% from current levels. However, the AI hysteria of last year has appeared to calm down. Some institutional investors, like Tiger Global, have reportedly trimmed their positions. Nvidia itself sold its stakes in ARM Holdings and Recursion Pharmaceuticals, while making a new significant investment in rival chipmaker Intel. This suggests a strategic reallocation of capital within the sector. Retail investor sentiment on platforms like Reddit turned more bullish following the Meta partnership announcement, but broader market commentary points to a rotation away from the biggest tech winners and into other sectors. The muted stock performance, despite the huge partnership news, reflects this cautious mood. Investors seem to be signaling that while the long-term story is compelling, they're waiting for confirmation in the upcoming earnings report before pushing the stock higher. Technical and fundamental check-in. From a technical perspective, Nvidia's stock has been in a consolidation phase since late last year. After a massive rally, the share price has been trading mostly sideways, digesting its prior gains. Momentum indicators like the RSI have cooled from overbought levels to a more neutral territory, while the MACD suggests short-term momentum has softened. This pattern indicates a pause in the uptrend, not a breakdown. On the fundamental side, the company's valuation is a key topic. With a forward price-to-earnings ratio in the mid-20s, the stock trades at a premium but is considered more reasonable now than in the past, especially relative to its expected growth. Some analysts point to a PEG ratio near 0.5, a level that can signal strong growth relative to valuation. The fundamental growth story remains powerful. It's driven by what's being called the AI supercycle, with hyperscalers expected to spend over $600 billion in capital expenditures this year. However, risks remain. There are concerns about a potential AI bubble, the sustainability of customer spending, and what some analysts call circular financing, where a company invests in its own customers. For now, the narrative is that the stock's recent pause is a healthy development, allowing massive earnings growth to catch up to the price. What to watch next week? All eyes are on Wednesday, February 25th for Nvidia's fourth quarter earnings report. This is the most significant catalyst on the horizon. Investors will be looking for guidance for the first quarter of fiscal 2027, with analysts currently expecting a revenue forecast of around $71 to $72 billion. Any deviation from that number will be significant. Commentary on the demand for its Blackwell and upcoming Rubin chips will be critical. The market wants to hear that demand continues to outstrip supply, confirming the growth cycle is still in full swing. Gross margins are another key metric. The company is expected to maintain them in the mid-70s. Finally, any updates on revenue from China will be closely watched, as the company had previously guided for near-zero data center sales from the region due to export restrictions. Looking at potential outcomes, a strong earnings beat paired with guidance that significantly exceeds expectations could finally break the stock out of its recent consolidation. Conversely, a report that only meets forecasts or includes any language suggesting a slowdown could trigger a sell-the-news reaction. A solid report that meets the already high bar will likely lead to a continuation of the market's current wait-and-see approach. Outro. Thank you for tuning in to TickerWatch. Please remember, this podcast is for informational and educational purposes only and does not constitute financial advice. You should always conduct your own research and consult with a professional before making any investment decisions. If you found this episode helpful, please consider subscribing, leaving a review, and sharing it with others.